On the one hand, I've showed how balanced this Bitcoin bull market has been, running up into fresh highs, pulling back into key support levels, and then consolidating before the move happens again and again and again and again. However, it doesn't make trading or investing any easier, especially when we consider the market sentiment at the times when we see these significant pullbacks. And in a couple of the cases, those pullbacks had broken through those support levels before several days later bouncing back from those support levels. So in essence, wiping out stops and then coming all the way back to put it back into a strong position. So today's video, we're going to look at those levels. We're going to look at USDT dominance, essentially another make or break, sorry to use the term. Altcoins, they're not looking too bad at this stage. The end of the bull market, the rotations that we've been discussing now for many months, and the invalidation signals. There was no trigger there, so I'll show you that on the charts. So before we dive into it, hit the like button if you haven't already, and subscribe to the channel if you're new here. Covering Bitcoin, crypto, stock markets, the real estate cycle, precious metals, and a whole host of other things. Basically every single day here. It's what I do full time. So join us here on the channel. Let's get it to 360,000 from today's video. BTC, short term, 18% down from the high, depending on which exchange you're watching. In some cases 15, some cases 20, but nonetheless, find ourselves now at 111. The next major level I'm watching is this white line through the middle. You can see it was the top in December. It was also pierced when Trump was inaugurated. It tested it through May and June before it pulled back. And then we've since seen that level come back as support. So basically resistance from December until June, 6 months. Now for the last 3 to 4 months, we've seen it being used as support. So I think $108,000 is a pretty key level at this stage. It's not the complete make or break, but it would definitely break a few hearts if we saw it break down from that level, and it would also start to break some of the key structure, key support levels. You can see just how many times it's happened now over the last 10 months, going back to December, call it 11 months, and nearly coming up to a year if we last here another month or two. The level below that is between 98 and 100,000. We saw the dump last week test close to those levels on some exchanges, but nonetheless 108,000 is a really key turning point here. You can see a couple of swing lows there as well, and those swing highs. So watch 108 on the weekly chart. Now if we take it down to a shorter term time frame on the daily, today, or essentially the last few hours, it closed underneath the 112,000. So it's not really doing anything to help the bulls out at this stage. It failed when it rallied to 116, came back down. It did get that daily close above 112, but since has closed underneath it. Now the only saving grace would be these last few hours of today's market. So we've just opened a new day in the last few hours, and you can see it's rallying at the moment. So in the next 24 hours would be lovely for the bulls, at least, for to see it close above the 50%. So 112,260. Watch that number on your charts. I'll be getting some updates through hopefully tomorrow as well. I just made it back to Australia earlier this morning, actually. So apologies if the words aren't coming out nice and clean. Okay, so 112, 116, 700, still watching that key level. And then of course, 118 and 120. They're the next key levels to the upside there for the bulls. That would put it into the strongest position possible. 118, 120, ideal. Now, one day's close underneath the support level isn't enough to completely break the structure. We've seen this happen before, especially when we see the market sentiment really roll over. So provided the price level holds, the market sentiment has been relatively stable in terms of resetting the extreme or the greed that we had a few weeks ago, and also the extreme greed that it touched on in July and May. The sentiment seems to be reset, and I am seeing a lot more comments about how the cycle should be over and it needs to end here and so on, right? And that, in fact, is not a bad timing for it to end. We saw the top there on the 6th, which is exactly 3 years like the other cycles, or almost 3 years, just that month short of 3 years. But each other cycle has basically been the same timeframes. So now calling for the end of the cycle is much more valid than what it was back in December or even back in March of 2024. Through this whole period of 22, 23, and early part of 24, everyone was still looking for recessions, and that's basically gone out the window. We do hear it, a little bit of it now, but we're really seeing a lot more of the liquidity coming back into the game and the everything bubble just running rampant with things like silver, all-time highs, gold, all-time highs, and of course the S&P 500 very, very close to those all-time highs. There's our everything bubble. So that is still intact, and Bitcoin hasn't broken down. Bitcoin is still holding up above this 108 level. It's, as I've said, make or break. It's that time now that we really need to see Bitcoin do something, especially in the short term, get back above 112 and then back above 116. We didn't get an invalidation of the bearish signal here. So there is 1, 2, 3 down bars, lower highs, lower lows, obviously a massive liquidations. That was the $20 billion day. And we were hoping for 3 up days. There's 1, there's 2, but we didn't get it. We just saw this day down. So this is still in order, the 3 bar rule here, which means it's probably going to be a longer pullback, a longer time underneath those highs, unless we can really see a strong day to break past those levels. Then we can start to see those highs getting taken out sooner rather than later, similar to what happened back in 2017. We saw that signal a couple of times when Bitcoin was at new all-time highs, November 2017, basically a month out from the top. And so if we think the top could be in the next month or so, yes, there are other theories that suggest that we could go another 12 months from here. Let's just put those aside for now, looking at the traditional cycle being roughly 3 years up. Last time we saw that signal, 1, 2, 3 days down, there was a quick reversal out of that low, which took out the high within that 1, 2, 3 green days up. So basically invalidated that signal very quickly, got back above, consolidated, and then boomed to that new all-time high. So we haven't necessarily seen that yet. I'm still holding some hopes for that, but of course the market's going to do what the market's going to do. And the hopes that I hold for that are because of things like the sentiment. It's been doing relatively well here with the reset. We've looked at that, and also with the FOMO finder. So part of the sentiment as well, we've seen at some of those low bars. Now, the other factor is the ETF flows. We saw some pretty big days out recently. So typically when that happens, you're seeing some sort of low happen in the market. We saw another low day there in the last 24 hours after really, really big inflows. So I'm still hopeful that we've got a low forming. Doesn't necessarily mean it has to be that price, but at least if we're close to it, then that's good signs for the next leg up as well. The other piece here is the USDT dominance. This one I'm not so happy with right now, but it hasn't been multiple days yet. We look at the daily chart, it's fallen, it's had a little rally here, and it seems like it's a bit more of a weaker rally than what we've previously seen. So in the next couple of days, and hopefully by the end of the week, we know the week has got about 4 days left, we get closes underneath 4.75. 4.75 has been a really important level for this bull market because it's the 50% level. There's the all-time low, all-time high, and right through the middle is at 4.75. We've seen the market spike above it. That's been those really big liquidations. That is March and April 2025, tariff announcements, lots and lots of sell-offs, and there it is, a big spike. But fortunately, through this entire period, it stayed underneath the diagonal here. So it's ran up, hit resistance, and then come back down. Now it is lower highs and higher lows, marginally, but it's still higher lows. So it's getting very, very tight here. It's not giving anything away. And basically it's a day by day thing here. Make or break, as I've probably titled it, something like that. We need to see this market get back underneath 4.6 in the immediate term. Right now, 4.85, which is still above the 50% at 4.75. Note that the USDT dominance has only had one weekly close above the downtrend here for this cycle. March 2025, 1 week above it, there's a close and then snap back underneath. Then we can take it back to 2023, which is basically at that low where it seemed like the market wanted to go back down. Bitcoin was trading roughly around $20,000 to $23,000 at that stage, and then USDT dominance collapsed. And you can see up there as well, there was 1 week up, snap back underneath, 1 week up, snap back underneath, 1 week above it, snap back underneath. So hopefully this is what we're sitting on right now. If there is going to be anything like that, the following week should ideally be a snapback underneath. So just enough to scare out the market and then snap back underneath, and quite quickly underneath 4.75, underneath 4.6, keeping very strong eyes on that particular level. Now, Bitcoin, while this is happening, Bitcoin and gold has continued to fall. So Bitcoin's value against gold has continued to fall. We've continued to see gold rise. I think there's still further to go, but the timing is the important part here. Now, over the last 10 months, Bitcoin has basically not gone very far. When you look at the tops here at 108, 109, and the current price, it's barely 3%. 10 months, 3%. There's been a very big shift, and that is obviously towards precious metals. We're hearing about it all the time now. I did a video 4 months ago. The multi-year bull market is kicking off and most don't know about it. Check that there, June, there's your receipts. And we watched on these breakouts happening. So if you're ready to take your investing and trading a little more seriously, create those plans, understand where these breakouts form, check out TIA Premium now. We are going to cap this very, very soon. So if you do want to learn about trading and investing through multiple different assets, navigating your portfolios through the peaks of the cycle, that would be the place to go. So we're still seeing strength in precious metals, and it doesn't necessarily mean that Bitcoin is over at this stage, but we have seen a lot of that energy shift from Bitcoin to gold. Now, gold has been continuing to climb higher, and that's why we're seeing this chart begin to roll over here, lower highs, potentially lower lows. It's Bitcoin's buying 26 ounces of gold now, whereas at the peaks it was buying close to 40 ounces of gold. This doesn't mean that Bitcoin is over and Bitcoin has topped. It's just that we're seeing larger gains in other asset classes. And if we see it on a macro scale, then I think that's time to pay attention to those other assets as opposed to just holding, hoping, and waiting. Similar to what happened in the last cycle. You saw the peaks there at 34, 35 ounces, and then it basically collapsed to 9 ounces. So Bitcoin only bought 9 ounces of gold. And so if you've got that opportunity, why not take it? Overall, I think there's still further to go because of some of these other indicators that we've been watching. Daily exchange volume is higher. It's continuing to climb. We got 100 billion over the last couple of days. We haven't seen 100 billion since January of this year. That was when Trump was inaugurated. We're still seeing relatively high liquidations, which means there are still more players in the game. $500 million in the last 24 hours. And the long short ratio has started to balance out here, 50.2 to 49.8. Over the last week or two, we saw very heavily skewed to the short side with a big differential. Now it's starting to get a lot more balanced, and we're seeing the liquidations still in a good level, nothing crazy extreme and nothing too quiet either. So there's still more interest in the space. Bitcoin dominance has continued to climb here. So short term, it's still climbing there. This is on the daily chart, and we are seeing altcoins also give back some of those gains. So if Bitcoin is up, altcoins are up against their USD value, but the dominance has also continued to climb here, putting in higher lows. And of course, we got this spike on Friday. But looking at the total market cap, so total 3, excluding Bitcoin and ETH, but including the stable coins, so there's still more liquidity out there. Still holding above good levels here, $950 billion. Obviously, it spiked down below the 900 billion level, but then quickly back up, closed above it, and again closed above it. And at the moment is above $1 trillion. So things are still looking good. Even if it did drop back down to the 950 billion dollar level, it's looking pretty good considering how close it is to those all-time highs after where it's come from and this huge spike down. So still hold hope for a good move there for altcoins later in the cycle. Now the Russell 2000 is the small caps, similar to your altcoins, and the all-time high has been taken out once again in the last 24 hours. The S&P 500 and the NASDAQ haven't taken out their all-time highs yet. They are very, very close. It is now within 1.5% of the all-time high price after falling 4%. But the precursor here could be that we're beginning to see a little more of that risk-on appetite begin to enter the market again. So all-time high 2021, all-time high November 2024. So that's 3 years apart. And now we're in October 2025. It did put an all-time high in September. So basically 10 months after that last top, big significant drop, and then it's climbed back. So there's still more signs that whatever liquidity is out there is still trying to chase returns. And it could be a matter of time until we see that start to flow over into Bitcoin and then over into Ethereum and altcoins as well, providing, in my opinion, providing that Bitcoin maintains the bullish structure here. At the very least, holding these lows, 100,000 to 98. So basically around $98,000 to $100,000 would be the very least here. Otherwise, we've got to reassess where we are. And basically, as many traders do, you get humbled. And I think if that starts to break down, I'd have to reassess my position. We're not there yet. Let's see how the next 24 hours goes if we can hold this level here and start to climb from that base. Now, the everything bubble continues to climb higher. We've talked about gold. Now it's at $4,250. The green line is your S&P 500. Bitcoin up there, $111,000. Meanwhile, the home builders ETF in the white line here is still lower highs. Now, in the last couple of days, it has rallied. So if we do begin to see this top break at 120 points or $120 for the XHB, the home builders ETF, that could mean new all-time highs for the home builders ETF. That is going to be a big one to watch should this early turn here that you can see on the white line start to climb and get back past those tops. This is an important one to watch for the end of the cycle. And so far, the everything bubble has continued higher. Yes, in one camp, I'm a little concerned with the position of Bitcoin right now, but that's because of the pricing in the last couple of days. It hasn't broken those levels, but it is down, and we haven't seen that turn around yet. Of course, with Bitcoin, anything can happen in the next 24, 48 hours. We just see this thing hold those lows and then shoot back up and take out 116. That's the ideal scenario right now. Next up is looking at the S&P 500 and where it sits for its market sentiment. Fear and greed is still sitting at 30. The last couple of days have obviously been lower. You got 32, 29, 30, 32 again. So basically just sitting in fear. So far, it seems to be resetting for the S&P 500 as well. So not bad signs there, especially as it is still following the 5-year cycle here. That's the red line that you can see. We've got the drop almost to the day, the recovery. You can sing along with me, almost to the day. And then we've got this next stage here. Looks like a couple more days of recovery before a bit of a push. Let's see what happens. I'm on the fence of how this can keep working out almost to the day by day. Now, I am not on the fence when it comes to gains for the stock market. So we have seen a 4% correction top to bottom here so far. We know the S&P can do more than that and still go higher, just like we saw last year with the August dump, and we then continue to see larger and larger gains. Average year for the S&P 500 after a 20% yearly gain. So we saw a 20% yearly gain. What happens next? This is your blue line here. After 20% gains, basically finishing the year out over 10%. You got 10.6%. So gains basically meet more gains. And October is typically the time that you wouldn't necessarily see those gains. And I mean, we got the 4% correction. There was talks of tariffs, 100% tariffs for China. And then of course, Trump's, let's say, backflipped on those again, giving us the taco trade, and the market has rallied from that point. Here are the worst times. We've talked about this on the channel before. October has given us some of those bigger turns and also corrections. Turns meaning like 2022, we saw the low in the market. So we can go right back. That was basically the bottom of the S&P 500 bear market. There it is, October. We had October lows in 2022, so in 2002, so 20-year difference. Here is your October low for 2002. We obviously had the collapse in October. It doesn't mean that every other asset is going to collapse for October either. We can see gold is hitting new all-time highs. I've talked about that already this stream. And also silver, new all-time highs, nearly $53 per ounce. And so for me, this is still leaning on that side of more money is out there. They're looking for areas to put their money. I think eventually we're going to see some of that flow out into Bitcoin. I can't say the same thing for every other altcoin out there. But speaking of altcoins, Ethereum's not looking too bad at this rate. You can see it's sitting around 4,037. Some closes above 4,200 is going to be that key level again. And at the moment, the short-term bounce, it's just sitting above 3,870. So in the short term, it's strong. Medium term, weak. Long term, strong. That's the difficulty for many at this stage, which is why I think it's still a confusing time because, as I said, short term, it's okay. Medium term, it's underneath the level we wanted at. And then long term, it's still sitting above $3,200. But for the long term to break down, the market would have to come back down underneath those significant price points. Underneath 3,200, long way from where the market is now. That's 20% more from where it is now. And that would give the confirmation that it could be the cycle is over for Ethereum. So overall, things aren't looking too bad for some of the major altcoins. As I've been talking about with Solana, it's probably another reminder there for liking and subscribing to the channel so you can stay up to date with it. We watched the 5 month, we were looking at 5 to 6 or so months for key turning points on the time frame. It did it again, 5 months up and had the correction. I had no idea how the correction would happen, how severe the correction could be. Like we saw on the 10th of October, quite a big day there as well, 15% for the open to the close, but for the entire swing of the day, it's 24%. So it's not to say that I know those things, but in terms of timing, it seemed like things wanted to come to an end, just like it did from the previous move to the all-time high. You can see 5 months low to top. You can see 6 months low to top, 7 months low to high before that correction, and then the next move. And the prior cycle also low to top, 6 months, 5 months, 5 months. So it has this inbuilt mechanism, which is the humans that are trading the thing, that can last roughly 5 to 6 months in one direction before they need time to recover, go to something else, get some more money, whatever it might be, before they start to hit it again. Now, the concerning thing would be, it hasn't happened, but look at how this chart is beginning to form right now. Here is a significant high, here is an all-time high, here is another high. You've got lower lows as well. So in one case, some may look at this as a massive head and shoulders, and then you've got your neckline. Is this thing going to break down? It's a long way to get to that breakdown point, of course. Otherwise, if it is able to hold 152 and then eventually hold this 195, that could be a good sign that we're going to at least attempt to test the previous tops here, 255 and 260. That could be good signs for the rest of this cycle, which doesn't really have that much time left, especially when I've been looking at XRP and XRP's timing, which has also worked out yet again. XRP, same sort of deal. It can last 12 months in one direction, 13 months, 13 months, 14 months down, 12 months here. It's like a repeating heartbeat to the market. 12 months, 12 months. Put it on logarithmic so you can see. There it is, 12 again, 13, 12, and 26. So it's a multiple of 13. And XRP did it again. 12 months up, came back down and collapsed from that point. So pay attention. I don't think there is that much time left. We're beginning to see things like XRP falter here, which has also called some of the tops before, basically a loss of interest to the rest of the markets. Solana also not able to get to that next high. Ideally, it holds here for that next run up. Ethereum doing much, much better than the majority of them, but that can obviously change with a drop of whatever the saying is. It can change on the flip of a dime. How's that? And of course, Bitcoin as well, still holding up relatively well here. In my opinion, there is still more time for the next move higher. So at this point for me, it's a make or break. Bitcoin looking relatively good, Ethereum looking relatively good. I think there could be a temporary scare based on the USDT dominance right now. You can see that it has broken this level, and that the temporary scare could come in the form of this week or next. And if the bull market is going to continue, I think it needs to continue after that point. Basically, within the next sort of 7 to 10 days, we see the scare, and then it's got to continue on. We see a breakdown in the USDT dominance. We see Bitcoin go higher, then Ethereum, and then ideally Solana as well. Like, subscribe to the channel if you want. Go and check out a few of these older videos. Otherwise, join us on TIA Premium, where you can learn how to navigate your portfolios through the cycles. That's across multiple different assets. Thanks again for your support on the channel. I'll see you guys back here at the next video. Till then, take care and peace out.